Technical Committee on the implementation of new minimum wage to look for new revenue sources. Vice President Yemi Osinbajo takes micro, small and medium enterprises clinic to Niger State. Nigeria Central Bank to hold first monetary policy committee meeting for the year next week. Oil bull market bounces back as Britain launches task force to tackle dirty money. This is Business Express reaching you from the nation's capital, and today we shall be looking at the implications of using Sukuk financing for infrastructure development. I am Musa Abubakar, your guide. Now let's begin the program with business development. The Technical Committee on the implementation of a new minimum wage inaugurated last Wednesday by President Muhammadu Buhari is to, amongst other things, identify additional sources of revenue to ensure that government can meet the increased cost that will arise from the implementation of a new minimum wage without affecting government's ability to meet the other obligations of government. Minister of Budget and National Planning, Udoma, while making this disclosure, said it is particularly with respect to the ambitious infrastructure development plans of the government. Senator Udoma, who was interacting with media editors in Lagos, explained that whenever a new minimum wage bill is enacted, there are demands for some wage increases even from those already earning more than the new minimum wage, and all these salary increases will impose additional cost on government. Therefore, he said the committee is expected to make suggestions as well as how government can raise additional revenues to ensure that government can still meet its expenditure on other services such as education, health, infrastructure and other important functions of government after paying the increased salaries. On budget deficit, the minister said government is proposing to bring it down slightly from the 1.95 trillion naira projected for 2018 to 1.895 trillion naira in 2019. This, he said, is 1.3% of gross domestic product GDP, well within the 3% limit set by the Fiscal Responsibility Act. As regards the debt service to revenue ratio, he assured that as the nation's revenue situation improves, the ratio will come down. Vice President Yemi Osinbajo at the weekend flag off the Micro, Small and Medium Enterprises Clinic in Niger State for viable enterprises. The clinic, he said, was aimed at bridging the information gap and encouraging MSMEs to be more efficient and capable of competing at the international level. Mukhtar Abubakar Wowo reports that the vice president, while in the state, also sympathized with victims of the recent fire disaster at Kure ultra-modern market.
So, for example, if you have a group of tailors who come together, many of them may be able to afford their own machines.
The Federal Ministry of Power, Works and Housing last week got a symbolic Sukuk check to finance 28 key road projects across the country as part of 2018 budget borrowing plan. Lekatun Babatunde reports that it was in line with government's commitment to bridge the infrastructure gap. The Sukuk offer gained significant interest from a wide range of retail and institutional investors. Let's hear the rest of the story.
The bulk of Nigeria's transport activity takes place on the roads. Nigeria has close to 200,000 kilometer road network, but due to her size, more needs to be done. The 7-year 100 billion naira sovereign sukuk is government's borrowing initiative to cater to the infrastructural needs of the public along with its attendant benefits to participants along the construction line.
There is for us a clear indication of the wide acceptance of this financing product. The significant increase in the level of participation by retail investors moved from about 4% in the last issuance to 17% in this current issue. And this means that the federal government's objective of financial inclusion is deepening.
The most important thing in terms of nation building, job creation, growth, and employment. I want to say again that there is no nation that I know of that has gone on to greatness without building.
A breakdown of the investment plan shows that 28 key economic roads earmarked in the 2018 budget would benefit from either construction or rehabilitation across the 6 geopolitical zones. 16.67 billion is allocated to each zone.
The most important aspect is to make sure that the contractors are deployed to site and the work starts and the entire Nigerian economy and populace can begin to benefit from it.
This is the second tranche of sukuk borrowing. The first was issued in 2017 and injected into 25 projects.
Dr. Mohammed Kabir Mohammed joins us now to discuss the topic, why sukuk? He is the Chief Strategy Officer of Jais Bank. You're welcome.
Thank you, Musa.
Well, access to credit indeed has always been a developmental challenge in this part of the world. So tell us, why sukuk?
Yeah, sukuk is an interesting instrument. It's one of the features of sukuk that makes it the right instrument for infrastructure development. Sukuk as an instrument is an instrument that makes the investor have undivided interest in an underlying asset, unlike a conventional instrument that is only the obligation of the issuer that you have as your own title.
Okay, what makes it more attractive than other?
Yes, you see, with sukuk, if investment is done in sukuk, it brings about prudency and efficiency in project development.
How?
When you have a conventional instrument, particularly in this part of the world, where we know that corruption is endemic, there's that likelihood that funds meant for certain projects might disappear within the system through corrupt practices. But with sukuk, there is a governance structure that makes it close to impossible for you to move funds meant for certain projects, you know, to other projects, not to mention siphon those funds, because there are layers of governance structure that exist under structure of sukuk that doesn't exist under conventional funds. You have a special purpose vehicle, you have a trustee that oversee that funding and the project.
Okay. Do you see it as a viable option for carrying out projects in the country?
Yes, it is. Looking at Nigeria as a country that has, as projected by experts, to have deficit in infrastructure by 2040 that will be in the tune of about $3 trillion. So it tells you that we have so much to do in terms of infrastructure if we are to realize the benefits of the economy as a whole. But looking at the challenges that we have with conventional instruments, one would be right to say that we need a purpose-specific instrument when raising funds for infrastructure in such a way that you're matching the funds with the specific projects that you want to finance.
Okay, 28 roads projects across the 6 geopolitical zones. What impact will that be to the economy?
That's really just a piece of the iceberg. It's a scratch on the surface. We know that, yes, Nigeria is a market that is just coming into this unconventional instrument. This is the second instrument that is raised by the government. So we have a teething stage beyond which I expect the government to develop more appetite for such an instrument, taking into account the benefits we got from the first instrument that we issued, the progress made. With a sukuk, it will give a contractor more confidence that funding that is meant for that project is already caged aside. You have a firewall that segregate that funds from general public funds. So that way we'll get to see more efficient project delivery by contractors.
Okay, looking at it, let's look at it from the micro perspective.
Yeah.
We've looked at it from the macro perspective. Now let's look at it from the micro perspective, talking about the individual.
Yeah.
How does it actually, how would the individual take advantage of?
Yes. Individual now, I'll take you mean from an investor perspective.
Yes.
Why should I as an investor be interested in a sukuk other than a conventional instrument? You know, looking at the structure in terms of the risk reward of a sukuk is slightly different from a conventional instrument. So as an owner of an instrument that is sukuk structured, you don't have only claim on the cash flow. You also have an undivided interest in the underlying asset. This could be beneficial interest on the use of product or service to be generated by that asset. So meaning you're more secured compared to a conventional instrument. So as an investor, it will give me more comfort to put my money in sukuk than in a conventional instrument.
Okay, what's the ideal way of seeking redress in case of default?
Okay. Typically, sukuk is a baby instrument. If you look at the global financial market, we've not have so far enough tested cases where you have a defaulting sukuk. There are a few, the Cameroon oil company, we have the Dana oil in UAE that are still undergoing trials where such entities have gone bankrupt and sukuk holders are trying to test what are their, remedies. But when you look at sovereign sukuk, it's slightly unique compared to corporate sukuk. Okay. Sovereign sukuk, beyond you having undivided interest in that underlying asset, it also has the backing of the issuer, and which means it makes it risk-free.
Okay.
So you can have a fallback where the underlying venture or service or business or asset has defaulted. You can still fall back on the issuer, in this case, the federal government of Nigeria.
Okay, let's look at the macro picture now. What are the benefits, particularly for a recovering economy such as Nigeria?
Okay, remedies in terms of using sukuk for development?
Benefits of sukuk
to an economy.
Most especially, particularly Nigeria is recovering from recession. What are the benefits?
The benefits are enormous. If you look at the first instance, when you borrow conventionally, there is this possibility that down the line you may face this challenge of compounding interest. We've known the famous statement that was attributed to a former president in Japan, where he said if you ask him what's the worst thing in this world, he will tell you that it's compound interest. Okay. Nigeria borrowed $5 billion and we paid up to $16 billion, and they still tell us that we still owe them $28 billion. So with a sukuk, you don't have compounding of rental or compounding of profit on that instrument. Okay. What you have is that ownership in the underlying asset and the obligation on the issuer to pay you the rental or the profit, but there's no compounding. So as a government, the federal government will be at more comfort knowing that this instrument will not lead to more compounding, more debt, like we experienced in the past. So in terms of debt servicing, you have a more crystal glass with a sukuk compared with a conventional instrument.
Okay, you heard the finance minister, retail investors, particularly from the bulk of those who have interest in the sukuk offering. What does this signify? For retail investors to have such interest, what does it signify?
It shows that not just on the issuer side, but on the resale side or investor side, it shows that there is that voracious, interest or appetite for mixture of instrument to be there in the market. Take, for example, if I'm a fund manager, I'll be interested in diversifying my portfolio beyond certain mix of asset classes that I have. And as an individual, I'll be interested also in diversifying my personal portfolio across certain asset classes. So Sukuk, being the newest asset class in the market, is given that opportunity because it has a different risk-reward structure compared to the conventional instrument. And to the foreign investors, it will give them, more comfort. They'll be more attracted to investing, in an emerging market in a Sukuk instrument than conventional, knowing that we have governance issues, corruption and all that endemic in this part of the world. But with a Sukuk structure, they'll be more comfortable to investing in such a country.
Okay. Thank you very much, Dr. Muhammad Kabir Mohammed.
It's my pleasure.
Thank you for your contribution.
It's my pleasure. Thank you so much for having me.
Now moving on, the latest monthly economic report from the CBN puts non-oil exports provisionally at $0.38 billion in October, indicating a rise of 46% month-on-month and 69% year-on-year. The month-on-month surge was attributed to a significant increase in receipts from minerals as well as food and agricultural products. The sectorial breakdown shows that proceeds from agricultural products stood at $51 million in October, representing 13.3% of total non-oil export proceeds. Meanwhile, industrial goods and food products accounted for 9.9% and 5.2%. Export earnings from minerals accounted for the largest share at 58.8%. Now, data show that oil prices fell by 1% on Monday, with Brent crude slipping below $60 per barrel after Chinese data showed weakening imports and exports in the world's biggest trading nation and second largest crude oil consumer. China's overall exports fell by 4.4% in December from a year earlier, the biggest monthly drop in 2 years. Let's see how some major commodities are trading. The all-share index of Nigeria Stock Exchange fell below 30,000 mark in the week ended Friday, the 11th of January 2019. Let's join Muplan Dakok for a review of market performance.
It was a week of mixed sentiments for the Nigerian Stock Exchange. A total turnover of 1.2 billion shares worth 14 billion naira in 19,278 deals were traded by investors on the floor of the exchange. The NSE All-Share Index and market capitalization depreciated by 2.64% to close the week at 29,830.70 and 11.124 trillion naira. The financial services industry measured by volume led the activity chart with over 1 billion shares valued at 8.7 billion naira in 12,287 deals. The conglomerates industry followed with 83.5 million shares worth 155.4 million naira in 750 deals. The third place was occupied by the consumer goods industry with a turnover of 50.5 million shares worth 3.4 billion naira. Trading in the top three equities, Diamond Bank, FBNH and Custodian Investment accounted for 465 million shares worth 2 billion naira in 2,448 deals. Also traded during the week were a total of 15,288 units of exchange traded products ETPs valued at 236,445 naira executed in 4 deals. A total of 17,996 units of federal government bonds valued at 18.4 million naira were traded in the week in 10 deals. All other indices finished lower with the exception of the NSE Industrial Goods Index, which rose by 1%, while the NSE AXEM Index closed flat. 22 equities appreciated in price during the week, 44 equities depreciated in price, and 103 units remained unchanged.
Figures from the Nigerian Stock Exchange show that the all-share index stood at 29,982.37 basis points, appreciating by 0.50%, while market capitalization stood at 11.180 trillion naira. Longest shutdown of U.S. economy as well as data from China tells negatively on markets in America. Amina Nujem takes us through performance of major markets around the globe.
Investor sentiment was high in Africa at the end of the week's trading on Friday. Namibia overall index, South Africa's JSE Top 40, Kenya's Nairobi SE20, and Tunisia's Tunidex ended the week in positive territory, while Ghana's JSE shed 0.03% to close at 2,501.19. Now, stocks in Europe saw little change on Friday as investors tried to navigate through the political uncertainty across the globe. FTSE 100 declined 0.36% to close at 6,918.18. German DAX lost 34.13 points to close at 10,887.45. And Frank's CAC shed 0.51 at 4,781.34. Stocks posted solid weekly gains, but ongoing U.S. government shutdown and worries about an economic slowdown in China pushed shares marginally lower on Friday. The Dow Jones Industrial Average and S&P 500 both fell 0.2 and 0.1. Nasdaq Composite declined 14.59 points. Asian stocks mostly gained on Friday amid improved investor sentiment following overall gains on Wall Street. Shanghai Composite was up about 0.74% to close around 2,553.83, while Hong Kong's Hang Seng Index gained about 0.5% as of its final hour of trading. Elsewhere in Asia, Japan's Nikkei 225 rose 0.97% to close at 20,359.70. And that's Global Market Reports.
Now, the Central Bank of Nigeria, CBN, in its latest intervention, injected the sum of $263 million into the retail secondary market intervention sales, being its first intervention in that sector this year. This was in addition to the sum of 39 million Chinese yuan concluded through a combination of spot and short-tenured forwards arising from bids received from authorized dealers. Figures obtained from the CBN reveal that the US dollar-denominated interventions were for requests in agricultural and raw material sectors, while the yuan sale was for payment of renminbi-nominated letters of credit for agriculture as well as raw materials. The Director of Corporate Communications at the CBN, Isaac Okorafor, said the move was in furtherance of the Governor's avowed commitment to ensuring foreign exchange liquidity in the system, as well as boosting trade and production. Okorafor also disclosed that the Governor will further unfold the bank's plans for the year during the first Monetary Policy Committee meeting for the year, scheduled for January 21st to 22nd, 2019. Well, let's take a look at how Nigeria's currency is exchanging for other international currencies. That does it for this edition of Business Express. Remember to send us your feedback via email businessexpress@nta.gov.ng. You can also reach us on Twitter, and the handle is NTA News Now, and the hashtag is BizExp. Enjoy the rest of the week. I am Musa Abubakar.